Hello guys, Dim Dexter. Welcome to this new YouTube video. Today I'm going to talk about how to really take advantage of the next market cycle and also how to find the correct timing of it. Before I start this video, we have a conference coming up in November 14th to 16th. So make sure to grab your opportunity and let's get into the video. So in this video, I'm going to generally talk about my market experience because it is very important that it's related to the market cycle we're having in 2020. So at the beginning of the cycle, we will have a series of boring season. And once the short seller gets eager to push a trade, and all of a sudden that they will get massive short squeezed, like I'm going to talk about in the video, at like APVO. Once they get squeezed, then you will give all of the people that are trying to go long and they see a ticker that's producing 1,000, 2,000% gain in a day, then that also will give them hope to be able to think that maybe the next play will be the same ticker as how it performed, like for example APVO. And that's where the patient short sellers will start to take advantage of all of the people that are trying to go long and maybe they're long into massive resistance. And that's where once the longs start to lose their money again, then the impatient short sellers starts to bring the market cycle back again. And that is a consistent loop will rotate about 3 to 4 times during the year. Let me give you an example. So in this week, we have APVO. This is a super runner. It actually went from $5 to $80 in a week. And normally that when we're looking at after hour runner or afternoon runner, especially when the stock decides to spike after 2:30 and close really strong, and it didn't really have any type of action at the beginning of the day, this is the type of ticker you will never want to short into. It's because, well, first of all, you don't really know where all the buyer is. And second, APVO was producing really low liquidity in that day. If the ticker has really low liquidity, it's really difficult to short and the spread is going to be really wild. And that's a big no, especially for long and short traders. If you really want a long APVO, I suggest to choose something that have higher liquidity. Definitely has to trade about 15 million shares in a day for you to have a decent entry and exit. So you can kind of see the habit of APVO. Each day it starts to spike in the midday or in the late afternoon. This first green day went from 7 to 14, second green day went from 9 to 19. Then starting spike in the midday again, 15 to 22. See, in this case, if the support are way too close to where you're supposed to drop, now, what does that even mean? So first of all, when you want to spot a momentum shift, you want to look for a decent range for the short into, which the point you want to short into is very far from the support area. In this case, APVO spiked from 10 to 17, and that is the minimum spiking percentage for breaking out of the support. The minimum extension you need is around 60 to 70%, and you need a massive amount of volume to actually trade in the top consolidation before you short into resistance. So APVO didn't really consolidate at all. You can see that it went from 9 to 19, consolidated a little bit, less than 2 hours, and only traded about maybe 5 to 10 million volume. And that is not enough to make the stock drop because it didn't trap enough back orders. So it just keep consistently doing the weird breakouts. And now on the Friday, you can see that it did actually a fake out, faded through the entire day. So my take on these type of multi-day runners, first of all, if the beginning spiking behavior is not correct, which I mentioned about earlier in this video, if they decide to spike in the afternoon, then it's a not very good shorting opportunity. And also, when you also want to go long for these type of tickers, you want to look for enough liquidity also. And APVO didn't provide that. And this is how market starts the next cycle because people are eager to catch the opportunity that they don't really want to pay attention to the liquidity or the charting behavior. And that's where they're making the major mistakes. So in the late Friday, the company filed a 13D, correct me if I'm wrong. It announced how much was the inside holder percentage, and all of a sudden the stock went from 24 to 80. When the stock going from 24 to 80, especially in the after hour, really low liquidity, if you are shorting APVO, you are basically trying to take the ask by yourself, and you are pushing the ask so quickly because there's really low liquidity. And also, the stock didn't really generate that much volume intraday, and then we're heading into after hours, that's even worse. So going into the next Monday, with all the volatility in the market after the election is over, and we also have APVO bringing the market back, and that's where the predictable pattern is going to come in the next about 2 to 3 weeks. So make sure study your statistics, always focus on charting behavior and the liquidity also. That's two very important factors for you to be able to trade very good in this industry. So that will be all of the content I want to cover today. Make sure to grab that latest conference ticket, and I will see you guys in the next video.